If you looked at STAAR Surgical's stock chart recently, you might think you're seeing a high-flying tech leader. But in the world of big league consulting, we don't look at the paint job, we look at the engine. And right now, this engine is smoking. Welcome to the dehydrated reality of STAAR Surgical. We've performed a forensic autopsy on their 2025 health, and what we found isn't just a scratch, it's a structural crack. Let's dive in. Here's a cold hard truth. Earnings are a mirage, but cash is the ground you stand on. On paper, STAAR tries to look stable, but look at that red number, negative $40 million in free cash flow. That's not just a bad quarter, that's the company's wallet catching fire. Why? Because their golden goose, the China market, just saw a 24% revenue collapse. Imagine 1 out of every 4 customers just vanished. That's the reality they're facing right now. Now, how does a company lose $80 million but still try to look okay to investors? Welcome to the kitchen of accounting magic. They use things like stock-based compensation, which is basically paying employees with company IOUs instead of real cash, to make the numbers look softer. But look at the bottom line. When you strip away the makeup, the dehydrated bottom line shows they are bleeding cash just to keep the lights on. They aren't self-funding, they're surviving. STAAR is basically a gambler right now. They are betting 17% of every dollar they make on R&D. That's like a person who's behind on their rent, spending half their paycheck on a lottery ticket called presbyopia. They need a miracle product to save them from their shrinking revenue. They're playing a high-stakes game where innovation is the only exit strategy, but it's an expensive one. Think of CapEx as buying a new house. In 2024, they were building big. In 2025, they slammed on the brakes. But here's the problem. That new factory in Switzerland is about to open. Once it does, the depreciation cliff hits. It's like buying an expensive car. The moment you drive it off the lot, it loses value. That loss of value is going to eat their future profits for breakfast. This is the most painful slide in the deck. Their marketing efficiency has basically gone into a black hole. They are spending 114% of their revenue on sales and admin. Read that again. They are spending more to sell the product than the product actually brings in. And look at the China DSO trap at the bottom. They basically gave their distributors a credit card with no limit, just to make the sales numbers look fake good for a while. That's a trap, and it's about to snap shut. STAAR is a specialist in a world of giants. They're like a high-end boutique trying to survive next to a Walmart and an Amazon, Alcon and Zeiss. These giants don't just sell lenses, they sell the entire operating room. Once a doctor buys an Alcon machine, they're married to Alcon. STAAR is just a guest at the wedding, and guests are much easier to uninvite when the economy gets tough. Is there any hope? Yes. There's secret sauce. Collamer. It's a material so good the body thinks it's part of the eye. While everyone else is arguing over software, STAAR owns the reversible surgery story. If you're scared of lasers, you go to STAAR. This is their lone bastion, their last line of defense. If they lose the luxury narrative here, the castle falls. Let's look in the mirror. Alcon is a cash cow. They turn every dollar of profit into over $2 of real cash. STAAR? They are in the red zone. This chart is the smoke alarm for investors. When the industry leaders are generating mountains of cash and you're digging a hole, you have to ask yourself, how long can you keep digging before the walls cave in? The eye care market is changing fast, and the quote dehydrated numbers we saw today are just the tip of the iceberg. If you're an institutional investor or a corporate strategist looking for the truth behind the PR, you need HDIN Research. We don't just read the reports, we find the story the reports are trying to hide. Contact us at sales@hdinresearch.com for the full-page forensic breakdown. Don't invest in the dark. See the reality.